Former Kansas City Fed President Esther George joins us now. Esther, after today's data, do you still wonder whether policy is restrictive enough?
Hi, Sarah. No, I think that we do see policy that aggressively moved is at what we would believe to be restrictive levels. But I think we have heard clearly from the Federal Reserve that they intend to be patient while they see how that policy moves through the economy. And so far, inflation has made progress, but it's made progress in part because of their interest rate and also in part because supply has been catching up to the levels of demand that we've seen.
You think it's made enough progress where they can think about cutting in September?
I haven't heard anything yet that suggests they think they've made enough progress. In fact, most of the Fed speakers are telling us, and we heard this at the last press conference, that they can be patient and they need to see more data. So I think if you just look at the inflation prints we've seen this year, inflation has not popped up again. So I don't think this issue of a rate hike is a real threat right now. But I do think they will want to see inflation begin to resume a move back down that gives them that confidence.
I feel like today's number, even last month's number, sort of showed us that those Q1 hotter numbers were an anomaly or seasonal or something funky was going on. And it does feel like we've resumed progress, maybe not as quickly as the back half of last year. At the same time, we're seeing increasing signs that demand is weakening in today's spending numbers, for instance, and in the GDP numbers from last quarter. So as those two things come into better balance, Esther, won't they move faster to avoid wrecking their soft landing?
Well, remember, Sarah, the goal is not soft landing, although that would be quite desirable. The goal that this committee is focused on is achieving its inflation target. And so they want to have confidence that inflation, which is still well above their target, is going to be moving down. And that will take more than just 1 month of contradictory data relative to first quarter. I think it's going to take them several more months, again, depending on how the data fall, to gain that confidence. So could that happen toward the end of the year? Certainly, I think it could, but I don't think it's happened yet. And this committee is signaling, I think rightly so, that they will wait and see as the data comes in to make that call.
What is it in the inflation data that worries you most? Is it the services spending? Is it the home prices? Because there are a few pockets there that have been a little bit sticky, and there are questions about whether keeping interest rates high for this long of time will actually help with that when it's driven by inventory problems, for instance, in housing, or catch-up auto insurance from the pandemic.
No, those are all fair points. I guess the way I look at the inflation data is to see how broad-based it is. And I think to this point, while we have seen certain categories of inflation, like goods inflation come down, we know that the housing services sector has some lags in its data, and so we'll need to see that. Services is really a different animal in many respects because it is the services sector that will be less sensitive to the Fed's interest rates. It could take longer. That's why I think when we look at next week's data, those will be important indicators too. So looking at the jobs report, what is happening in that labor market? Is it continuing to soften?